Welcome to Anafram Market Perspectives.
Anafram Market Perspectives, Friday, July 18, 2025. Welcome back to Anafram Market Perspectives. It's Friday, July 18. This week brought fresh all-time highs for the S&P 500, a flurry of new tariff threats from Washington, and a wave of strong corporate earnings. Let's unpack the key market movements and macro developments shaping the week. S&P 500 Weekly Recap. The S&P 500 climbed another plus 0.54% this week to close near the 6,300 level, powered by strong tech earnings and solid economic data. Nvidia surged over 5%, Broadcom gained 4%, and Oracle added momentum with consistent institutional buying. Microsoft held firm near record levels. Netflix was a major highlight, soaring past $1,275 after delivering strong Q2 results, raising its full-year guidance, and beating EPS expectations with $7.19. Amazon gained nearly 0.7% on upbeat retail data, while PepsiCo popped 7.5% after an impressive earnings surprise. On the flip side, Meta pulled back, minus 3.55%, despite announcing its AI voice acquisition. Johnson & Johnson and Eli Lilly saw mild declines, partly due to new pharmaceutical tariff rumors. Industrials and financials traded sideways as investors weighed macro risks. Trump tariffs and trade update. Trade tensions are heating up again. President Trump announced a 30% tariff on select imports from Mexico and the EU, effective August 1st, unless renegotiations occur. While USMCA-compliant goods are exempt, Mexico swiftly initiated high-level talks and condemned the move as politically motivated. Pharmaceuticals and semiconductors are now caught in the crosshairs. Trump is eyeing phased-in tariffs on these sectors, which could ripple through global supply chains. Additionally, he issued a 50-day deadline to Russia, threatening 100% tariffs unless peace negotiations begin. Morgan Stanley now calls this a mosaic tariff strategy, sector-specific, country-specific, and likely to generate over $2.7 trillion for the U.S. Treasury over the next decade. China, for its part, is de-escalating, easing chip export controls, which gave U.S. tech stocks a lift. The EU, meanwhile, is preparing 84 billion euros in retaliatory measures, but hasn't ruled out a settlement. Expect markets to stay headline-sensitive through August. Global inflation and economic data recap. This week's economic indicators painted a nuanced global picture. Trumpist retail sales rose a surprising plus 0.6%, double expectations. Trumpist CPI edged up to 2.7% year-over-year, and core inflation held at 2.9%, its highest since February. Jobless claims dropped to 221,000, signaling ongoing labor market strength. Thread Philadelphia Fed Index surged to 15.9, the highest level in over 2 years. Now let's zoom out to global inflation. Canada's inflation rose to 2.9% in June, marking the second monthly increase in a row, driven by housing and energy. Say-Clon-Knee inflation cooled slightly to 2%, right in line with the Bank of England's target. Services inflation remained sticky, though. Eurozone CPI was steady at 2%, with core inflation at 2.6%, reflecting underlying wage pressures. In Asia, China's Q2 GDP grew 5.2% year-over-year, beating expectations, although internal consumption remains fragile. Taken together, these numbers show that inflation isn't vanquished, but central banks may still have room to hold rates steady if geopolitical risks escalate. The VIX closed at 19.36, slightly higher than last week, but still within a low volatility zone. Investors are staying cautiously optimistic, balancing strong earnings against rising geopolitical tension and an unpredictable trade policy path. Bonus section ETF and stock picks review. Let's revisit Monday's ETF and stock picks. XLE, Energy Select Sector SPDR ETF. XLE ended the week at 86.62%, showing signs of fatigue. It's trading below the Ichimoku cloud, and MACD momentum is turning bearish. With OPEC raising output and Trump's tariff on EU crude looming, short-term risk is elevated. NFL x Netflix. A breakout star this week, Netflix delivered a strong quarter and jumped over 12%. MACD remains sharply positive, and the stock is clearly above the Ichimoku cloud, confirming a bullish continuation pattern. TSMC Taiwan Semiconductor. TSMC crushed earnings with $30.07 billion revenue and 2.47 EPS, well above expectations. It spiked to $248 before modest profit-taking set in. MACD is still bullish, and demand for AI chips continues to support the longer-term trend. Investor takeaways. This week reminded us that markets love clarity and earnings beats, but fear uncertainty. The S&P 500 and Nasdaq pushed higher on strong tech results, but geopolitical risk remains on the table with Trump's tariff blitz, EU retaliation, and Russian sanctions all converging. Inflation is creeping up again across the US, Canada, and Europe. And while central banks may pause for now, the outlook for Q3 remains fragile. For investors, this is a time to stay selective, diversified, and agile. Focus on companies with pricing power and strong free cash flow, and don't chase extended names without a catalyst. Thanks for joining us on this Friday edition of Anafram Market Perspectives. We'll see you Monday with a fresh pre-market analysis, economic calendar, and our next round of ETF and stock picks. Until then, stay informed and stay ahead.
Thanks for watching. If you found this valuable, hit subscribe and share this with others. See you next time on Anafram Market Perspectives.